wondering if you could talk to me about an investment idea or stock, something that's ticking your conviction boxes at the moment.
Yeah, this is an interesting one. Recently spun out of Iluka. It's called Deterra. It's a mining royalty company. Deterra own a revenue royalty over Mining Area C, which is one of the big iron ore provinces where BHP produces its iron ore. Now, why is it interesting? We think, in the work that we've done, it's probably arguably the best royalty that you can own globally and one of the highest quality. Reasons being, its mine life. It's probably 50 years, if not more. Counterparty risk. Your counterparty's BHP. That's who you're hoping will pay you. We think they can meet those obligations. In terms of producing over the cycle, doesn't matter whether iron ore's 220 or 25, the production's going to come out because they're very, very low on the cost curve. And there's no capital to spend. So the royalty owner doesn't have to spend any capital increasing production. And where we are right now, Deterra is going from 55 million tonnes of production out of the Mining Area C province to 145 million tonnes. Now that will be ramping up over the next 2 years. That's all paid for by BHP. In fact, for every million tonnes extra that they produce out of that province, Deterra gets a $1 million check, plus the royalty on top.
So we're still looking at those sort of left behind recovery, plays such as Sydney Airport, which I mentioned. Clearly it's been terribly impacted by what's gone on with the borders being closed. And we do think that tourism will return at some point. So we're prepared to wait that out with a company like Sydney Airport, which we see as a monopoly asset here in Sydney. It's an iconic asset. And those tourists will come back, and again, that company will thrive. So that's one company that we think, in terms of a long-term trend, will be a beneficiary.
Timberlands are an interesting one. There's a couple of timber REITs out there that we really think are pretty interesting, because not only are they sequestering carbon or carbon sinks, they actually are effectively making carbon building materials, because that timber captures the carbon and then the tree is used to help in the building process. So I think that's a really exciting one for the next 10 years and probably still underappreciated. There's been an enormous increase in lumber prices, and there's a distinction between lumber price and the timber price, believe it or not. The lumber is the cut timber. The lumber price has escalated dramatically, but the timber price, the log price, has actually stayed quite low. And the reason for that is around the disruption caused by COVID and the lockdowns, etc. So I think timber log price, that's going to be an exciting area for the next decade, quite frankly.
I think one of the topics that has really been building in markets is the idea of ESG, and who's the ESG winner. And if you look at some markets offshore, you could buy a wind farm company or a solar company or something that's kind of right at the pointy end of decarbonising the world. That decarbonisation process for the world is going to take somewhere between 100 and 150 trillion dollars. That's a lot, right? The US economy GDP is only about 21 trillion, right? So there's a lot of money. So if you say, well, okay, I think that needs to happen. I want something that's going to be part of that big tailwind. What do I own in Australia? I have a slightly different view that a really great stock for that is Macquarie Group, because Macquarie have seen, 100 trillion, that's a lot of investment that's got to be made. So the group has been focusing on the last couple of years of hiring in scientists and engineers, specialists who can really help them understand the really fundamentals about the various technologies that will be part of that, because they know if they understand that better than anyone else in the room, they can be the advisor to the wind farm developer. They can be the advisor to the wind farm off-taker. They can be the advisor to the wind farm acquirer. They can co-invest. So they are positioning themselves to be the green investment bank to the world, or the picks and shovels play on decarbonisation. And we think that's got a long runway to go.
PointsBet is doing some very, very clever things in terms of winning its share and its presence in a number of US states. And we think with their credentials and their experience and their model that they'll progressively grow out their footprint across the United States. So probably PointsBet, which we've been an investor in, Ely Griffiths Group's been an investor in PointsBet from quite early on and continues to be an investor. We're very excited about the way in which they're approaching this terrific opportunity.
We really like Zoom at the moment, and it's quite a controversial name because it really is in that basket of companies that had extreme tailwinds from COVID, but have since been seen as this business that maybe people don't really want post-COVID. Do we all want to be stuck? We hear about Zoom fatigue. Even the CEO of Zoom on the earnings call highlighted even he had Zoom fatigue. So this is a business that saw a 300% revenue acceleration during COVID, and the market doesn't want to own it now because it's going to decelerate to somewhere between 40 and 60%. Now, if you think about what that's meant for the stock, it's actually underperformed the broader global equity index by 60% since September. So this is a business that the market thinks doesn't have any second acts. We actually believe that they're going to turn that tailwind from COVID into new verticals that the market's not anticipating. So Zoom, we believe, will be a central communications platform for large enterprise, not just video conferencing.